Welcome to Market Matters. I'm Sulhi Azman, joined by Khoo Chuang on this edition of 5 January 2016. Anyway, Chuang, it is the second trading day in Bursa Malaysia as well as for most part of the region. The market, they saw recovery, brokers on bargain hunting following 2 days of rout.
Yeah, it was all about China, right? Because yesterday collapsed, worst opening day in Chinese share market history. The CSI 300 down 7%, triggered the circuit breaker, weak manufacturing data, weak American data. Everybody was selling China, everybody was selling America. So it limits all the window dressing that was happening at the end of last month. It was all ended up with the mannequins being naked once again.
Yeah, correct. You know, and this China rout is actually pushing everyone into the red like yesterday. But anyway, looking on the KLCI today, closed out 0.8% or 12 points higher to 1,666 points. Some 1.8 billion shares traded worth 1.94 billion ringgit. The most up counters was Petronas Dagangan, followed by MPI and also British American Tobacco, while the down counters were led by PIE Industry, United Plantations and also Daibochi.
Yeah, we saw $600 billion of market value raised from the Chinese share market yesterday. But, you know, as it is usually the case, technical bounce this morning, the KLCI rebounded. Nice little bounce for them. I don't know how sustainable that is, because when you look at it, Shane Oliver from AMP Capital and Investors in Sydney, he was quoted by Bloomberg and said he expects more UN devaluations and easing ahead. He reckons that there's going to be much more volatility in financial markets and the global economy still needs monetary policy support.
Yeah, it looks like Chinese needs more accommodative policies. And last year, they cut interest rate like few times, and also they also devalued the currency by 2% in order to export to boost exports. And it's also a Chinese-led stories for the on the macro side, right?
Yeah, I mean, there's going to be. I mean, we saw unattributed news reports saying that the Chinese government has been intervening in financial markets and supporting, basically the fact that share sales by major owners have got to be limited until at least January the 8th.
Yeah, correct. Anyway, moving on to the regional market, Shanghai Composite today dropped 0.3% or 8.5 points to 3,288 points, while the Chinese CSI 300 closed out 0.3% and Japan's Nikkei 225 slipped 0.4% or 77 points to 18,374 points. Moving on to Hotstocks, where we have Jaya Tiasa closed up 22%, or rather surge by 30 cents to 1 ringgit and 64 cents. And this is a company controlled by Tan Sri Tiong Hiu King.
Yeah, the East Malaysian millionaire, or is it billionaire now by ringgit terms? So he owns newspapers, property, he owns media companies, he owns... Jaya Tiasa is, as well as Rimbunan Sawit, which is another company of his. It's a timber company which also does palm oil. And I think the reason why they surged today is because they announced that they're going to discontinue planting their plantation land bank after December this year, which means they're going to be turning cash flow positive. And the market took that very, very kindly.
Correct. And research said that they were neutral on this, as Jaya Tiasa's remaining plantable area is not significant. And this is about what? 0.4% or about 268 hectares. And Jaya Tiasa's developed and planted area remains sizable, like 69,000 hectares as well. And they also mentioned to Bursa that they want to adhere to Wilmar's integrated policy.
Yeah, I mean, I don't know how market moving that is, because sustainable planting practices is good in theory, but it doesn't necessarily put more money in the pockets of shareholders, right? And research was actually they've reiterated a buy call with an unchanged target price of 196 for Jaya Tiasa. Of course, that's still some ways from the 164. That's around about 30 cents or about about 25% from here. So clearly there's some upside to go in the stock.
Yeah, correct. And also they value the stock at the EV or per planted hectare of 24,000 ringgit, which is a steep discount, or steep rather from 60,000 ringgit for brownfield land bank in Sabah and also Sarawak as well. If you look at the outlook for timber sectors, as they were mentioning,
which is the other part of their business.
Correct. They said that demand is going to be affected by the current economic uncertainties.
Yeah, and at least from the palm oil standpoint and in some of the outlook, seasonal low production and the effects of El Nino are expected to reduce the supply of CPO. We've just seen the latest numbers out from the authorities. Seems as if that trend is intact, and we might see a little price bounce in palm oil going forward.
And that should also bode well for their earnings as well. And so to take it all away, the palm oil capex cycle is still over, but it's still good for cash flow. It also announced adherence to sustainable planting practices, and also AM Research reiterates Jaya Tiasa as cheap entry to palm sector. Moving on to stocks with momentum, where we have Ekovest, which is pegged as positive momentum now. The mother share closed up 7.1% or 8 cents to 1 ringgit and 21 cents. And how does the warrant perform?
The warrant B closed up twice as much, actually by 14 cents or 5 cents to 40 cents. Now, of course, this is a company where the executive chairman is Sri Lim Kang Hoo. And if you don't know who that is, he's the owner of Iskandar Waterfront Holdings. He's the He's in business with the Chinese Railway Engineering Construction Company. They've just won the bid for Bandar Malaysia.
Yes,
and I
correct.
suspect that Ekovest is moving today because they are mooted to be building Duke 3, the highway, next to Bandar Malaysia, which is going to be a big beneficiary for the business.
Yeah, I mean, it's just about some sort of realignment where if they were to realign, right, it will be like very close to Bandar Malaysia as well. And Duke Highway is actually a cash cow to Ekovest, although they have accumulated loss of 180 million ringgit, but they are also enjoying some kind of toll rate hike recently announced.
That's right.
Last year.
Well, they got three businesses. They're property developers, the construction guys. They also do highway and toll concessions. As you say, the Duke Highway is theirs. In fact, in the most recent quarterly one earnings, said that Duke 2, which is the second edition of that Duke Highway, will be the earnings and revenue driver for 2016.
Yeah, I mean, if you look at the earnings, right, in the first quarter of 2016, they net profit actually doubled to 3 million ringgit, while revenue actually grew to 134 million ringgit as well. And this is definitely going to be very, a positive looking for them as well.
Well, the share price has been moving, but not by a great deal. It's up by 11% since the start of 2016. Not a great deal by for example, Top Glove terms, but up by 34% since their 90-cent close on October 5th, 2015. So if the Bandar Malaysia affiliation is confirmed and announced by the company, you probably expect to see the stock move a little bit further because, as we know, construction stocks move on news flow.
And also, right, the Ekovest shares is also quite expensive. At 1Q earnings, it's about 34 times current quarter earnings.
That's right. I looked at the share price. I looked at the earnings. They've done about 35 cents in basic EPS for the quarter ended September 2015, which is about 34 times where they are. Which is why versus their share price is about 34 times earnings. So it is expensive from that viewpoint. Earnings have got to catch up with valuations.
Correct. Now, just to sort of take it up all the way, this share price today up today on speculation of its toll concessionaires business, which is the Duke Highway, will benefit from major owners, especially the Ekovest is controlled by Sri Lim Kang Hoo. And also earnings are strong as well. First quarter revenue and also NPAT has doubled thanks to property divisions, and earnings have to catch up, as rightly pointed out by Chuang, to valuations.